I am Bosun Omofayo. We'll be back with you after the break. We're taking a look back to the global marketplace where billions of dollars have been shipped off companies with relationship to British Petroleum with the oil spill in the Gulf of Mexico. We'll look at how the stock market is taking these and other stories coming through the wires. That's next.
First, you've seen the quality of the people that were put in charge of these institutions. Secondly, to make it very clear that the mandate that they have is not to wind down or to slow down or to liquidate, but to build and correct it. There have been mistakes. The mistakes have been handled appropriately. We will make sure that there are penalties for bad behavior so that other people do not behave like this. But primarily, we are looking at the future. And what we think you need to tell your customers is that they should look to the future and stop looking at the past. The banks are where they are today. We've got the worst news. What is likely to happen is that in the very short term, we're going to have a rapid turnaround as we address the problems. Now, the final thing which I didn't say in my presentation is a question I've been asked, maybe to be asked again. I did say we have not offered any of these banks to any investor. We do not intend to force on these banks any investor. However, the central bank will not allow these banks to go back into the same key-hand structure that led it to where they are. So we will look for
back to the program. Well, thank you very much for watching. Let's start with what's going to be the biggest story. Tomorrow will be the meeting of the G20 finance ministers and central bankers in South Korea. A two-day meeting, Thursday and Friday, to try and find solution to the global problem of sovereign debt crisis starting from Europe. Now, the message, according to the news wires, according to Reuters, will be to reassure the global marketplace and stability. The euro is falling 10% against the dollar since the month of April, is heading towards 1.2 in the sports markets. Now, the story is also hitting the wires on CNBC.com right now is that top central bankers around the world are saying they would not take their assets out of the euro. The Chinese, the Japanese, the UK, and others have reaffirmed, including Germany, that they would not take their assets out of the euro in order to prevent a massive downturn in the global financial marketplace. That's the story that's coming on the wires this morning. But let's get to the top of the table, where the Spanish jobless claims fell 1.84% in May. Well, the market is trying to add that to the basket of trouble already. The Japanese Prime Minister's top story is the biggest story in Asia today. The Yukio Hatoyama quits before July's general elections. The Asian stock took a dip on that. The Japanese yen also dipped, and the stock market, you saw the Nikkei 225 off 1.12% at today's closing bell. Canada is the first of the G7 countries to hike interest rates. They've been almost flat, but among the G20, it was Australia that have hiked interest rate about 4 times within the past 6 months, but Canada is following now. The benchmark rate is about 0.5%. British Petroleum is embarking on another bid to capture gushing oil amid the criminal and civil probe being instituted by the Office of the Attorney General in the U.S. And we told you earlier on that the European bourses were largely negative today. The market back here at home, let's get back to talk about home affairs here. The interbank markets hit another yellow within the last 24 hours. We started yesterday's trading session on a sluggish note. The Naira is also a little bit mild yesterday, according to currency traders telling us late yesterday that they are waiting the central bank to do its twice weekly forex auction between tomorrow and Friday. So that's going to put a lot of activities within the next 72 hours of the first trading week in June. Esther Wodaga, our markets reporter. Morning.
Morning, Berson. Thank you so much. The foreign exchange market is very hungry right now for the CBN auction, which will take place today. Now, I'll start off with the interbank market. Now, the cost of lending among banks dipped marginally on Tuesday, on the first trading day of the week, as rates moderate on liquidity. Now, rates are currently back at year lows of around 1%. That's for core money on the recent injection of fiscal funds worth 750 billion naira from the Federal Account and Allocation Committee. Now, on Tuesday, core money fell 0.08% to close around 1.19%. Also, 7-day money, we saw 7-day money also coming down yesterday, closing at 2.34%. However, 30-day money managed to stay afloat yesterday, closing around 5.50%. Up from 5.41 on Friday. Now that the market is more active, the Central Bank of Nigeria has stepped down on its weekly auctions at its open market operations. Now, this was a measure it was forced to take to help mop up excess liquidity from the system when rates surged to record lows. However, now that rates are back at around 1%, that's for core money, market dealers said they do not expect the Central Bank to resume regular operations at the open market operations, because they expect the liquidity to dwindle out of the market very soon. So the central bank, according to them, will continue to stick to its weekly primary market auctions. Now, that's it from the money market. Moving on to the foreign exchange market, we saw the Naira slipping marginally yesterday against the USD, adding to bank foreign exchange market on supply pressure. Now, don't forget that on Monday, the central bank was meant to have an auction due to the public holiday declared on Monday. There was no auction. So right now, the market is eagerly awaiting the auctions from the Central Bank of Nigeria. Now, yesterday at the BDC market, we saw the Naira exchanging around 153. Not much change there. That's about the amount it's exchanged for around last week. Now, against the British pound, the Naira traded 230 Naira, and against the euro, it's softened around 200 Naira to the euro. Now, at interbank, at the fixed income market, we saw the market recording mixed numbers on Tuesday on both the short and long tenor instruments. Now, for the 3-year bond with a 10.5% coupon rate maturing on the 22nd of May 2012, we saw the yield rising up from 5.01% on Friday to about 5.04%. Now, most of the traded activity was recorded on the 20-year instrument with an 8.5% coupon rate, which dipped about 0.5% to close around 8.09% on risk appetite by investors. That's it from the money market. Person.
Well, thank you, Esther. Just before we go, let's add to some of the stories that give you concern. The global bond new issues market has been slowing down because of the crisis over the sovereign debt problem in Greece. That's a report coming through the wires this morning that yesterday it was quiet in the U.S. $2.2 billion was issued on Monday, but yesterday the market was very quiet. The global new issue market, according to Bloomberg, failed after failed to revive, I beg your pardon, after $70 billion that it declined in the month of May. So the story is that even the countries in emerging markets such as Argentina is facing a number of problems right now. What you call the credit market, the default swap rate is rising in some of the sovereign bonds across Europe. Get on the wire and get more on this story. We'll get back to the top story here for us is the countdown to the first year of Lamido Sanusi's in office. Coming back after the break, Dr. Luke Sholadada, the chairman of Nkore Investment and Securities and a one-time president of Nigeria's Institute of Directors. debate continues on what's the last 365 days of Lamido Sunusi. You see it on television. It's also available to you online, marketnewstv.com. Let's move on. Dr. Olushola, thank you very much for being part of the program this morning. Lamido's bullish run is 365 days, but he's got more runs to do at the marketplace. Just before we went on the break and discussed a few other global market issues, your experience in the capital market, as it were, and in all the markets as well, at a time when some of these crises were unfolding, it was obvious that the gangrene, as it were, extended beyond those first five commercial banks that the central bank disciplined on the 14th of August last year. So now that the central bank is moving to the second phase, talk about the financial sector stability. Now, the catchphrase is changing from just banking sector reform to an entire financial sector reformation.
Yeah. Well, they cannot take the banking sector in isolation if you want to address the problem of the financial sector, because when you talk of the financial sector, you are talking of the banking sector, the banking subsector, you are talking of the capital markets subsector, as well as the insurance subsector. You find that the cause of the problems of many banks at the inception of Sanusi Lamido was as a result of the problem in the capital market. The issue of margin accounts, which became the in thing all over the world, but in Nigeria we seem not to know how to manage it very well. You see, many banks, if not all the banks, there is no bank that could be exempted from the fact that it didn't grant margin facility to the capital markets. And the feeling was that the share prices will continue to grow up. So as a market operator, during that time, there are many bank officials that were coming to me, begging me to come and borrow money in order to buy shares. That if you can just put in 30%, the bank will give you additional 70%, just something like that. And many banks have their own variance of all these what is called margin facilities. And many banks ran into problems as a result of margin facilities. In fact, they created subsidiaries, as they call it. And that's why Sanusi Lamido is now saying that he does not believe in this universal banking again. If you are a commercial bank, concentrate on your commercial banking. That's the second phase of the reform he's trying to work on. But when you look at the interface between the capital market and the banking industry, during that time we are talking about, when Sanusi Lamido came into power, you find out that the margin facilities granted by banks so enormous. So let's say if you put everything together, it's enough to ruin the entire the banking system. And so what they are not doing, there's a bill before the Parliament, before the National Assembly now, which I'm sure is in the third reading of thereabout, on this asset management corporation, as they call it. And the whole essence is to allow that corporation, the new company, to take over all the exposure of banks via the margin facilities, so that they have a clean record position to be able to start granting credits again. As of today, no bank is granting credits. And funny enough, many banks are not even taking deposits. Only God knows the reason for that. And they are doing that by discouraging the depositors. Because if you are given about 14% on a deposit of 100 million before, and suddenly they now write you that the best they can do for you is 2%. So you have to decide whether you want to take your money out of the place and do something with it.
But you're not going to keep 100 million naira at home.
Hey, but
unless
you can
dig up some very big hole.
No, but you can. There are other uses you can put the money.
Okay.
I mean,
at least you can come back to the stock market.
You can come back to the stock, and it's even helping the stock market now.
So banks are a little bit careful, as it were,
they're a bit wary
of lending money and of collecting deposits as well, because you could get burnt on both sides, as it were.
Yeah.
So you folks in the stock market are benefiting. Okay. So we won't be surprised where the money is coming from. Now you're giving us an answer. Enabling a healthy financial system is not. Lamido was the one who. Most of the problems rest on his shoulders, as it were. When there's a problem on an economy, the first person to blame is the central bank, governor anywhere in the world. But Lamido won't do this alone. So how do you think the rest of Lamido's colleagues, as it were, on Broad Street should help him? The Securities and Exchange Commission, the central bank, the various interest groups, as it were.
Yes, and that's why they now have, I mean, it has been in existence for some time, this Financial Services Coordinating Committee. The head of all the financial organizations, NDIC, DG of SEC, the DG of the Nigerian Stock Exchange, Governor of Central Bank, the insurance, the director of NACOM, National Insurance Commission, they all come together, I think, quarterly basis, to have common discussions on how to solve the problem, the financial problem of this country. Because one particular sector, I mean, organization cannot do it. And there must be a common goal. Otherwise, if the central bank is embarking on a policy and is not taking other members of the Financial Services Coordinating Committee into it. In the UK, for example, they call it Financial Services Authority. In fact, they don't have that's the only authority that is directing the affairs of the financial sector in that country. The Central Bank of England is not as powerful as the Financial Services Authority, because they have all enabling power to deal with issues coming from capital market, issues coming from the money market, issues coming from insurance, and all the rest of it like that. From there, because if you are solving one problem of one sector and you are losing sight of what is happening in the other sector, what you are gaining at that sector, you may be losing it because of the activities of the other sector. So I quite agree with you that all hands must be on deck in order to solve this problem affecting us. The meltdown has taken place all over the world. Each country is finding solutions how to solve the economic meltdown problem. Nigeria, we're having our own style, our own approach to solving it, and realizing the fact that Lamido and his team, they have identified the cause of the problem from the banking sector. And that's why when they came out of the Bankers Committee meeting last week, I mean, the decision was taken that for now, no bank should be giving loan for what is called the margin facilities. For now, let's clean the slates and let's see how they can come out with appropriate method of granting bank margin facilities.
Let's take one very quick one before we'll let you off a few more minutes with you. Because of the various activities you've done, you also operate a little bit one leg, as it were, in the real sector. So as a one-time president of the Institute of Directors, you relate with your colleagues who are manufacturers, industrialists, and all that. So we'll talk about the real economy. You also have a very good a sense of what we're talking about here. The contributions of the financial sector to the economy, face me, I face you, a kind of approach of a thing. How do you think it will go moving forward? Or how do you think it should go under the second phase of reform?
Yeah, if I'm to advise the governor of Central Bank, I would feel that we should return to the position we were in about 1986 or 86 to 88, what happened that time? That's what is called sectoral allocation of credits. And so the nation, I mean the government of this country knows what it wants to do about the real sector, developing manufacturing, developing agriculture, which are the two, and mineral sector, including oil and gas. So if annually the government in conjunction with central bank decide that, look, banks should grant facilities to those sectors that will create employment, will help the economy to grow, then we'll be there. But because of what is called this free for all something that remove all these government directive and all the rest of it, you cannot run a economy without the fiscal policy. So the fiscal policy of government, which is chaired by the Federal Minister of Finance, they should work hand in hand with the central bank. Because when you talk of the fiscal policy, you are talking of the taxation and expenditure of government. And if government is spending money on one particular sector more because they want growth in it, if the private sector, they are not assisting, if they are not helping the government to make the place grow, and the only way the private sector can make the place grow, like manufacturing or agriculture, is to encourage banks to give money to that sector. If you leave banks on their own, they want to put money where they can get the best income.
Or quick returns, as
well. Quick returns. They will want to.
So we think Lamido is a little bit on track right now because he's talking about aviation, the power sector,
manufacturing,
manufacturing with the Bank of Industry. You think that's the way we should go?
That way should go.
So that we don't continue with the lopsided way of all those non-performing loans just for oil and gas, and then buying stocks or speculation.
Speculation, yeah.
That's what you think.
That's my position. That's what I think.
So you think we should, if we return to those that period, it will help us keep bankers from misbehaving?
It will help us, because for now, or until Lamido came into power, you find out that banks on their own, they use the depositors fund to trade in stocks, to trade in forex, give money to other service sector. That
at a point they were importing rice.
They are importing rice.
There was a particular bank that went
which is
down,
not good for this economy.
That merchant bank that went down because one or two of his shiploads of rice were sunk. The high seas. And the bank went down on Broad Street.
That is it.
Quite interesting development.
Very. I won't call it interesting. It's very sad. Very sad.
Very important time. Sometimes some of these issues can be.
And another thing I must say about the capital market itself, you find out that equity market is the in thing for now. But if we want the capital market to assist in the development of the real sector of this economy and the growth of this economy, the bond market must grow.
Must come back alive. Let's listen to one of your colleagues, as it were, as junior colleagues on the floor. David Andori from Lamba Securities. We want to get a sense of today's market. Now you're talking about stock market. David, good morning. Thank you for coming in at this point. Yes, Dr. Olushola Dada is the chairman of Ankoria Investment and Securities.
Okay, my greetings to him.
Yeah, you can hear you live from the studio here as well. We're just discussing a number of issues in the banking sector. Yesterday, give us a sense of where those high volume came into Fidelity, into Zenith, more than 30 million, Access Bank about 28 million, Access went up on with about 40 kobo yesterday. Skybank also moved on. Those are the four banks, as it were, on the front burner yesterday, starting the brand new week and brand new month as well. What's the trend today's trading? Are we still seeing the banks deciding the direction of the market, as it were?
The banks are actually down very severely right now. The sector is down by 0.63%. And it appears to be tracking the other sectors of the market down because the general index is down by 0.11%. And so we'll say the share, the contribution of the banking sector to the decline appears to be more than average. Although heavy volumes are still being turned out in the banking sector, Fidelity Bank today, let's see what the volume that has begun today on Fidelity Bank. Fidelity BK. Okay, well, just about 1.2 million units have already exchanged hands today in Fidelity Bank, which is not really much compared to yesterday. Let me look at Access Bank. Access to just about 0.15 million units.
Okay, David, because of time, let me cut in here very quickly. Because of time, we got to move on. Check through the oil and oil marketing sector for us very quickly. What's the general trend? Because the oil and gas index yesterday was up about 0.3%, tracking the banking sector index.
Yeah, even right now, the oil index is still up by 0.33%. Precisely, I overheard somebody talking about Chevron actually performing well today, but let me see the position. Yes, Chevron is contributing massively to the position of the oil sector. It's actually on full bid now, trading at maximum price of 18 naira 77 kobo. So one can say that is the main driver of the index for that sector this morning.
All right, thank you, David. I'm sorry we got to let you go at this point. We appreciate your contributions to the program. David Ndorin from Lamido Security is one of the traders live on the floor. Dr. Lushalada, well, thank you very much for being here. I'm sure you were listening very carefully to find out how the market was doing while you were here. You can't take your mind off the market. Even though we're discussing Lamido, I'm sure you still think of what's your traders. You have a trader on the floor.
Yes.
Always.
Yes, always.
Okay. Let's bring in Esther also at this point. Let's spend the next 2-3 minutes to quickly wrap up the program discussing the month of June. Doctor, did I give us a sense of how you think the market should be in June? The month of May, very quickly, we had the first 2 weeks very blistering blue, all the numbers were green as it were. Then the second week the market was spiked, so we had some downturn within the final 2 weeks of May. What does this tell you for the month of June we're stepping into? Looking at activities in the interbank as well.
Yes. Yeah. Are we talking about money market or talking about the capital market?
The stock market.
The stock market. For the stock market, what you find out is that what happened in May, and there have been an up and down since the beginning of the year, and the reason for the ups and down is the profit taking of investors. I mean, once the investors observe that the prices are moving up, then they start unloading what they have, possibly that the thing has got to the top. Let me quickly sell off, because I bought this thing many years back when the price was this low. So let me quickly sell it off. And when many investors decide that, are deciding that way, the price will come down. That's one. Profit taking can be a cause. Another cause is the company's performance. You find out that there is a cycle. All the companies quoted on the Nigerian Stock Exchange, many of them are now having December as their end year. And if December is their end year, it means that most of them have their end year 31st December 2009. So they will be having their AGM, coming out results. And in expectation of results, especially if they have brought quarterly results to the market over a period, you find out that investors will now be speculating that XYZ companies are likely to come out with good results. Let me quickly buy more of the stock. And if they are expecting that they will even declare bonus, let me sell part of my holding so that
and we can wait for the bonus.
Bonus. So all those things, that's the market performance.
So that kind of rebalances what you do on a daily basis.
Oh yes.
You're an investor as well as a trader.
Of course.
So you see both sides of the market.
Of the market, yeah.
Esther, just give us about 30 seconds there about to add to what Dr. Dushidara said. One day the interbank goes up, the second day it goes down, then the stock market moves up the next day. This causes this markets on both sides of the same street. Interestingly, how does it look like starting the last 24 hours?
Oh well, like. Just quickly go back to May. The month of May for the interbank market was a turning point. We saw rates, the second week of May, we saw volatility. We saw rates moving up as high as 10%. But then we saw rates crashing back in the final week of May due to fresh injections of about 70 billion. Now, just before then, central bank made frantic efforts at the open market operations, giving weekly auctions to help moderate liquidity at the market. But right now, we're seeing rates back at where we started at the beginning of the year, around 1%. But according to the market dealers, this is not going to last very long. They expect the market to pick up, activities to pick up, and they expect rates to climb very soon, up to probably, we might see coal money by the end of this week rising up to probably 2 or 3%, depending on how liquidity moves out of the market.
Oh, okay, Esther, I guess we've got to hang it in there. We'll continue the debate tomorrow, the discussion tomorrow. We can never have it. Dr. Olushola, we thank you very much for being part of the program today. We hope to see you on the show in the very near future. The chairman of Korea Investment and Securities, the immediate past president of Nigeria's